Welcome back to the Wall Street Closing Wrap, where we break down today's biggest market movers and what they mean for your portfolio. The three major indexes ended mixed. Profit-taking after Nvidia's earnings triggered a broad pullback in tech, sending the S&P 500 below the 7,000 level after a choppy session. At Thursday's close, February 26th, the three major U.S. indexes headed in different directions. Selling pressure and heavyweight semiconductor names dragged the Nasdaq lower. Despite hawkish comments from Fed officials, defensive capital rotated into consumer staples and financials, allowing the Dow and small-cap indexes to eke out modest gains in a volatile session. Now, let's dive into the numbers. Gold held steady above $5,100, trading in a tight range. Silver struggled, dragged down by uncertainty around industrial demand, and slipped back below the $90 level. Fresh comments from the U.S. president on the situation in Iran reignited supply concerns, sending NYMEX crude to its intraday high before it settled into a range near 4-month highs. Cryptocurrencies pulled back slightly after a recent bounce, with limited short-term volatility. Nvidia tumbled nearly 5.5%, leading the tech sector lower. The post-earnings valuation reset weighed heavily on the Bloomberg Magnificent 7 index. Tesla also fell more than 2%, with only Microsoft and Meta managing modest gains. Individual stocks showed sharp divergence. Salesforce bucked the trend with a surge of more than 4%, while Netflix and Berkshire served as safe havens. Lilly and Broadcom, by contrast, pulled back with the broader market. The Philadelphia Semiconductor Index softened, dragged down by Nvidia. Both TSMC and AMD dropped more than 2.8% as markets turned cautious on near-term valuations in the AI chip space. U.S.-listed Chinese stocks moved in line with the broader market, with EV names turning in a weak performance as risk appetite softened. If you want to know more about U.S. stocks, click to follow us quickly. The next program will be more exciting.